Good evening, this is Nick Inman from VolumeProfileTrader.com on Tuesday, February 7th, and basically jumping right in, the market continues its move higher, and it was probably on the back of the Euro rally, the dollar sell-off, which continues, and that's going to be good for risk appetite. People are going to continue to put money to work due to that circumstance. As long as the dollar keeps falling, money's going to go elsewhere, and we're seeing that with the market. And if I zoom in this week, today, I should say last night, we were holding yesterday's close balance area around 1338, dropped below that on Globex early this morning, bounced off the value area low, and basically moved higher throughout the day, slowly drifted higher, and made new highs for this current rally. So as far as I'm concerned, everything still works in this market. The only thing I have to say is perhaps this is a little bit of trendline resistance that's forming, which is just connecting the most recent highs, and we're back at those levels. Perhaps we get some type of pullback. However, it's still right to be a buyer in this market, and until that, until we start, I should say, until we stop making higher lows and higher highs, there's no reason not to continue to buy this market. So overall, the S&P continues to work. The NASDAQ continues to work, though the NASDAQ's flatlining a little bit more just from viewing it the way it's looked the past few days. But it's also outperformed to the upside, so that's just something to be aware of. And the Dow made a new high today. So all the major indexes made a new high. Just to show it, I haven't showed it in a while. Volatility index, it wasn't down a lot considering the market, rallied a decent amount today. It was close to flat on the day, but from low to high on the day, the market had a pretty good move. But watch out for some type of buying in the VIX, just because we're so low. $17.65. That's beyond low for the VIX. So it's in the market environment that we are in. So that's just something to be aware of. People are probably, big institutions, coming in and buying that cheap protection just to be on the safe side, because they don't want to have a situation where they're looking to sell their stock and they can't, and the market continues to go lower. That's a frustrating situation when there's no bid in the market. So looking at the daily chart, you can see this uptrend continues, and we're looking for any type of selling pressure up at the value area high for the year. And if we get that, it would just be a buying opportunity, and that's something to be looking out for. But until we stop trading along the upper end of this Donchian channel, there's no reason to even think about selling. So the only thing I have concern about is, as we go through our names today, a lot of names didn't perform as great as I would like for them to, considering the market did pretty well. Chesapeake, we're trying to bottom fish on this name, looking out 2 years. We have the point of control for the last 2 years, the heaviest volume traded price, right at these levels, looking for some type of support here. We're starting to get a little more sideways consolidation rather than down, but until we start to really see a breakout to the upside, it's right to have a small position in Chesapeake, be involved, and don't be overexposed to this name. Similarly, Alpha Natural Resource, still think this goes higher, but we had a pretty big reversal today on pretty good volume. However, it was inside yesterday's range, so that's just something to be aware of. And if, for example, tomorrow we get another small day, up or down, doesn't really matter, as long as it stays within this range. Maybe we're forming a little bull flag, and this thing continues to push to the upside. That's what we're looking for. However, it could easily come down and test the point of control It's done it every single time, so there's no reason why it won't do it again. Apple is by far the easiest hold in the portfolio. Continues to make new highs every day. $500, that's your target. However, the higher it goes at this steep of an angle, the more anxious I get to take profits. However, given the fact that Apple, there's no sign that this uptrend in Apple is going to end, especially since it made a new all-time high today. So I think Apple continues to work. There's no reason to even think about taking profits yet. Just realize, we're really extended on Apple. MasterCard, this was a good buy off the lows, and we continue to see higher prices. This is good. I think you just keep a trailing stop, whether it's intraday lows, which would mean your stop is below today's intraday low, 388.65, or you can have it even, on some type of wait for a pullback, and then when you see a bounce, buyers come in, have your stop below that level. So I still like MasterCard. I have bigger exposure to American Express, which continues to work. Printed a new intraday high relative to this most recent run. It still makes sense. I still think it's going to these highs. I think it's going to print new highs. It's just the potential for a pullback is there, just like it is for the entire market. Riverbed continues to drift higher after off of these lows from earnings. Big down move on earnings. However, it was right to the point of control. Right, you can see this huge volume at these levels, and we traded in there for a few days, and it's been off to the races since. Yesterday was up 6.5% or something, and today nearly 1%. So just something to be aware of. Watch for some potential top end of the range, but overall, I do think Riverbed has a shot to go up towards 34. I'm looking at this volume up here, 34, value area highs 35.50, something to be aware of. Sprint opened higher and then traded lower on the day. The only thing I like about Sprint is the setup that we're seeing, which is similar to a lot of charts that I've featured. Point of control at the bottom end of the range, starting to poke our head above. Would like to see some type of move up towards 3. Really, other than that, there's really not much to say. Alright, gold, big intraday reversal today. Basically sat at the lows this morning when the market opened, 17.11 or so. And from there, roared all the way north of 1750, which that's a big time move, over 2%, and it looks like at least we have our risk defined on gold. We put our stop below today's intraday low, and at least that if it goes below today's intraday low, then there's more selling to be done. But make no mistake about it, we are in a trading range right now from 1760, call it, to 1715 or so. And until we break out of that range, those are kind of the boundaries that you want to play off of. However, just like a lot of names, for example, Apple and whatever, it's hard to say that this run to the upside's over on gold, and the likelihood for more upside is probably pretty high. So that's just something to be aware of and realize, what could happen. Silver continues to press against this point of control, $34 or so. If we poke above it, we're going to $36.50. If we get above that, it's $40 or so. However, let's stick to where we are now. We continue to balance within this range. One thing that's important is to see what the volume looks like at these levels on an intraday basis. So if I bring in an intraday chart, you can see our balance range that we've had, and February's point of control, you can see it was resistance the past few days. It was right to be a seller up at those levels. We blasted through those levels today, so what you would expect is to see any type of pullback to this point of control level. What you would be looking for is some type of buying pressure so you can define your risk below that. However, we still are in a range, and this thing could easily pull back down towards the lower end of the range, 33.20 or so. So that's just something to be aware of. Just while I'm on the commodity train, crude's doing what I thought it was going to do, and I'm going to zoom in here. I was talking about, crude bottoming around this 98.70, 98.50 level, and was looking for some type of bottom. We didn't get that. In fact, we got the opposite. We got a sell-off, but we've balanced off, and we are right back at that point of control for January. So if we can hold these levels, that I interpret that as one big rejection from basically sub 98 down to 96. That's all rejection, and the potential for a move back up towards these highs here, call it 101.50, which I'm looking at this volume here. It seems like an easy target, so that's just something to be aware of. You also have a little downtrend resistance going. Every time it's came to that level, it's been right to be a seller. Maybe that changes, but I do think there is easily potential for more upside on oil. So looking at ConocoPhillips, we got long here right at the lows. It continues to move higher, so it's pretty easy to stay long this name. Once we get up to the top end of the range, $73, another dollar or so, we'll reevaluate, we'll look for selling pressure. But trading between the point of control and the value area low for the year, you would like to think that this thing's going to make a run towards 77, which is the value area high, hopefully $80, just that round number that traders tend to target. Halliburton continues to trickle sideways. I do think we're hammering out a base here, and we're going to see $45, $46 on Halliburton. Just give it time. If we do start to break below this trend line, then you really have to reassess, but there's no real reason to sell. We do have a lot of selling days that we've seen in the past couple of weeks, and that's, that usually signifies some type of top, but I love the fact that the point of control is at the lower end of this yearly chart, and the potential for more upside I see as pretty great. Polaris, this is an easy hold too. It's as easy as Apple. It just continues to make new highs. Glad we got long here around the 53 to 55 level. Should continue higher without a problem. Cardtronics, covered this over the weekend. I think this is going to go to new highs. It's going to go above 28.74. You can see a bounce off the 200-day moving average and off the point of control. That's a double whammy right there, and that signals that we're probably going to go and test the upper end of this range. $28 should be an easy target. Under Armour, it's at the value area high for the year. I'm not sure that's going to matter much. What I think is more important is this 75 to 72 level is such big volume. If we see any type of pullback, the likelihood for a bounce on the 200-day moving average is pretty great. So I do like Under Armour on any weakness. Hopefully you own some from around $74. That's where we've been covering it, and expect more upside. So long as the dollar really continues to fall, equities should continue to rise, and that's just something to be aware of. Yahoo, still like this pattern. We talked about it last night. Nothing's really changed. We have this, lower highs, sort of flat, we have consecutive lows off the 1475 level, and recently we have lows off the 1540, 1550 level. So we have a mini high base within this range, looking for it to poke above 16. That's the point of control from the year. If we do get that, I do think that there's some real move, a real move in Yahoo can happen. Now, it may only be $1 or maybe $2, but nevertheless, it's going to move vertical. Freeport, watch out here. We're struggling against the point of control for the year, and we could see more downside without a problem. If you can pick this up towards $42 to $40, I think that you have to be all over it just for a longer term view, and with the expectations that we'll retest 48 and eventually get up towards 55. Las Vegas Sands looks like it's a little tired, and we can see some type of pullback. But after this run that we've seen, don't you think you'd rather be a buyer of Las Vegas Sands rather than a seller? And on weakness, technical difficulties there, but on weakness, it looks like you want to be a buyer of Las Vegas Sands, perhaps off the 48 level, which is the value area high for the year. If we look at the intraday chart, it could be as high as 49, which is January's point of control, or it could be, you wouldn't want to see it get this low, but $45 or so. That's a big high volume area over the last 90 days, but I'd be more $49, $48 sounds like a better level. If you really zoom out on Las Vegas Sands, just like a lot of these charts, maybe that's a little bit too much. Okay, you can see that we've been trading sideways for a long time, and eventually this thing's going to move. And right now we do have a higher low than these most recent lows at 36. So you have 36, and then you have a higher low at 40. And from there, we've made a new high. The only higher level we've seen is since this huge move off the lows from back when it was $1.38 in 2009. So this is the likelihood for Las Vegas Sands to move higher. You know, you look at other names like MGM, and this looks like it's really at the top end of the range. However, if you zoom out and look what's really going on, you can see way back when we were at higher prices, back when we had the market boom and then the crash. We've been stuck in a trading range on MGM since. Like a lot of other names, we are going to move on this, and it's just a matter of time. You just have to give it an opportunity, and you will see the benefits of being long names, with a longer term horizon, and not really putting too much emphasis on the day-to-day moves when you have big market moves. So overall, I think the market continues to work so long as the dollar continues to move lower and the euro continues to move higher. We should see some type of positive correlation with equity prices moving higher, and really stay long until the market tells you, it's time to take profits, and it's really not much harder than that. So take care. See you tomorrow.